we've heard there the analysis from Ross. Do you think the RBA, what's the RBA in your view going to do next week?
Look, I think they'll leave rates on hold. That was our view before this, but we were feeling fairly nervous about that. Obviously, as Ross pointed out, the trim mean, the underlying measure of inflation, came in a little bit less than expected. So that's good news. And you could more broadly argue the inflation numbers were in line with the Reserve Bank's forecast back in May. So it doesn't justify any further upwards revisions to their inflation forecasts. I think they will stick to their assessment that by 2026 we'll be back in the middle of the target range. And that all argues, I think, for the Reserve Bank to leave rates on hold. Just one other point to note in all of this. Yes, the Australian cash rate has gone up by less than in other countries at 4.35%. It's less than in many other countries. But if you're a mortgage holder in Australia, you've seen your mortgage rate go up by much more than seen in many other countries. An average mortgage holder in the US would have seen their borrowing costs gone up by maybe 0.5, 0.6%. Huge range there. But if you locked in, as Americans do, for 30 years, a couple of years ago, you're still paying those super low rates coming out of the pandemic. Whereas in Australia, the average mortgage holder has seen their mortgage rate go up by 3.5%. So you could argue that monetary policy is a lot more potent in Australia. And I think that's one of the main reasons the Reserve Bank has not had to raise rates as much as in other countries. But I think the Reserve Bank next week will tell us inflation is still too high, still too early to think about cutting interest rates. But the money markets, the economists, they'll start to focus on when the next move will be. And we think it will be down probably in February.
Okay, so you think we perhaps out of the woods in terms of this rate hike cycle?
I think so. Look, there's still a risk there. The money market swung from one extreme to the other.
That's right.
A couple of months.
Hard to keep up, Shane, to be honest.
Yeah, it is very hard to keep up. A couple of months ago, there was talk of some economists talking about 2 hikes. The money markets were saying 70% probability of another hike. And then, of course, as the chart that Ross Greenwood just put up shows, they're now talking about some probability of a cut next week, albeit a very small one. And the money market is now factoring in a cut from February next year. So, I think the numbers have calmed down those fears. But you just got to bear in mind that the US went through exactly the same scare about 2 or 3 months ago. They had high inflation numbers through January, February, March. There was talk that maybe they'll have to raise interest rates again. New Zealand back in May was talking about possibly having to raise interest rates again. We have seen other countries go through exactly the same pattern. It's just that we're lagging a little bit. We took longer to reopen from the pandemic. It took longer for our inflation rate to pick up. It peaked a little bit later. So we're operating on about a 3 to 6 month lag on other countries. Likewise, on the way down, we're going through the same scare that the US went through about 3 months ago. And I think in 3 months' time, we'll be back. The Reserve Bank will then start talking about rate cuts, but they're probably not going to start till February next year.
Okay, probably just in time for an election. Interesting indeed. A comment, not a question there, Shane. We'll see you soon.
Take care. Thanks a lot.